Hello traders and welcome to another video analysis. Today is Tuesday, the 13th of the April 2021. Let's take a look at the Forex calendar to see what is going on the market. As you can see, we are full of the British pound news, the news that might affect the British pound, because those are the news from the United Kingdom. The GDP, industrial production, manufacturing production, visible trade balance, construction output, index of services and stuff like this. Everything you see here is kind of important data straight from the British economy. As you can see, GDP is worse than expected, is 0.4%, while the expectation was 0.5%, but it's still better than minus 2.2%, so this is not that bad at all. Industrial production is up 1% versus the 0.5% expected, and manufacturing production is up 1.3% versus the 0.5%. So there should be that should be a good news for the UK economy, of course, and that should lift up the British pound. So we will definitely take a look at the British pound. We got some other data during the London session. As you can see, at 10 o'clock we have the economic sentiment and the current situation data to be published. The forecast is 79.1 points, which is more than 76.6 points for the last reading. So the economic sentiment is expected to accelerate or improve in Germany. Of course, we got the separate ZEW survey for the economic sentiment from the whole Eurozone, and this is and those data are expected to be released at the level of 77.2, which is again better than last reading of 74. During the New York session, we have important data regarding the consumer price index. The consumer price index is expected to increase from 0.4% to 0.5%, so there is slight inflationary pressure in the US. This data will be released at 1:30, and at the end of the day, 8:15, we got the FOMC member Raphael Bostic speech. So there will be some interesting comments regarding the economy. So let's take a look at the British pound in form of the euro to the British pound chart. As you can see here, we have very interesting bounce. It looks like this bounce here on a daily time frame chart looks impressive, but if we compare it to the last bigger bounce, which was 2.25%, we can see that this one is just slightly bigger, 2.36%, which means that the level of 8,671 pips had been violated, okay, but there is not much extension above this level at all. The next target would be 8,739 pips, but this target is out of reach right now for the bulls. So despite the fact that this looks very, very nice for bulls, it looks like a nice, strong, dynamic bounce. It is at the same percentage, almost at the same percentage as the previous one, which means that might be some sort of the correction. So this might be only a corrective bounce towards the technical resistance, not a separate new beginning of a wave up, of a different impulsive structure that might reverse this long-term downtrend. Okay. However, we should take into the consideration that this orange colored line was almost hit here, which means that this bounce might be caused by the bounce from the long-term trend line as well, because this is the usual reaction for the off market or for that situation. The level of 8,471. This is the swing low for the bulls. So if they want to continue the up move towards 8,739, 8,795, this level of 8,471 must not be hit again, right? Must not be broken. Of course, the momentum jumped above the level of 50. The high was at 62. So this is another good indication of this bounce, that this bounce is strong, is dynamic, and the momentum is still above the level of a 50. But once we get in the middle of this range, the momentum should get to the level of 50, and of course that would change the whole picture. So please take into the consideration that this might be only a corrective bounce. People are buying euros, selling British pound, but it doesn't mean that the new uptrend has started just yet. Let's take a look at a cable. What is going on here? As you can see, our scenario towards the level of 1.3538 has not materialized yet. We got this free wave to the downside done here, so the simple corrective structure had been terminated here at the level of 1.3673. Then we have, of course, a bounce towards the level of 1.1918, and this is our key level here, short-term key level. Why? Because there is a bearish engulfing pattern. Right, so we got a bearish engulfing pattern. We have again violation of this channel line, which is kind of important because for the long time the cable had been trading inside of this channel. So right now we are out of this channel, but it's still important level for us. And of course, let me just mark the lows of the wave C here. This is still important level because 1.3670, because of course this level had been tested, and so far market didn't break below it. So right now we are considering this level to be a double bottom, possibly in the short term, of course, a double bottom level. But any kind of a violation of 1.3670 would lead the market to lower levels like 1.3568 and 1.3486. So right now the Fibonacci might be not that much necessary, and we have this short-term trend line. Let me just do it this way. We have this short-term trend line here. As you can see, ABC had been completed. We got smaller ABC to the upside. So all of the move down right now on a daily time frame, and all of the move up right now are in free waves, ABC. So those are some sort of the corrective moves, ups and downs. So there is no indication of the uptrend continuation, right? So we are waiting for the impulsive wave up on this market. We are waiting for the 5-wave move to the upside in order to continue the uptrend. So right now we are trading around the 1.3761. This is the intraday technical resistance. We are below this trend line, below this channel. So please consider that we are still under the influence of or under the control and influence of supply side of the market, and the RSI is below the level of 50 as well. So they are still trying to push the cable below the 1.3670 level in order to, of course, penetrate the lower levels towards 1.35 and 1.34, of course. So this is the cable. Let's take a look at the end on the US dollar to the Swiss franc, because we have some data from US coming soon. This is the inflation data. So as you can see, as we predicted, is our wave 4 developing still to the downside. There is nothing wrong with this, because of course this is the biggest right now correction in the wave 4. Looks kind of impulsive. So right now everyone is selling US dollar and buying Swiss franc, but there is still wave 5 to the upside missing. So if we follow this scenario, there should be one more higher high above 9,466 pips to be made soon. So please consider the fact that this is only corrective wave that is actually trading in the previous wave 4 territory around 9,212 pips. The technical support, which is correct, of course. This is a typical behavior of the wave 4. The next target is 9,203 and 9,162 pips. So this zone here is the typical zone of the retracement for the wave 4, and we should expect some sort of a bounce from this zone. Of course, if this bounce will be impulsive in nature, we might have the wave 5 to the upside in progress, and that would be the last wave to the upside to be made on the daily time frame chart on the US dollar to the Swiss franc pair. Please pay attention to the level of 8,956. This is the invalidation level. So as long as the market trades above this level, this scenario of a 5-wave advance is still valid, is still in progress, is still developing, and there is nothing wrong with this scenario, because the lows of the waves, the highs of the waves 1 are very, very low, and that's why the wave 4 might be just developing towards the lower levels. This is everything according to the Elliott wave principle. And the last look on the RSI, as you can see, we are deep below the level of 50. We had the bearish divergence between this high and this high. As you can see, this was the higher momentum, this was the lower momentum. So this is the reaction on the bearish divergence as well. Nothing wrong with that. We are deep below the level of 50, 40, 42 points right now. So the market is being controlled by the supply side. The sentiment is still negative, and this is the reason why we should expect some sort of a bounce from the level of 9,162, 9,203. So those are the target levels for the wave 4. We can of course put some Fibonacci levels here and see where are the retracement levels, but for right now, because we retraced to the typical level of the retracement from the wave 4, which is the previous wave 4 of the lesser degree zone, like 9,212 lows, right now we are not putting the Fibonacci levels. I think this is enough to wait for the market reaction on these two levels here. So that's everything for me for today. Thank you very much for watching, and I hope I see you guys tomorrow. Take care and bye bye.